which compared to the previous guidance of 11%. Shares trading up 1% at the moment. Mark, what do you think of the Goodman result?
Yeah, overall it was a pretty decent result. Obviously statutory profits dropped, which is probably the only bad thing that was in there, just on the revaluations, which we're expecting. These REITs have all been trading at pretty heavy discounts to NTA, so that was always going to come back. I think up a few percent's probably fairly reasonable. They have beaten expectations, but maintained their distribution, which I think is smart from management overall, because with higher rates, it's been a while since they've had to endure that, and they'll probably want to keep a little bit in the coffers. But if we do get a soft landing, or they're even talking to no landing, now, and we start to see terminal rates pull back from their recent peak, well, perhaps these guys can beat expectation next earnings season, and that'll and perhaps the distribution comes at a later date. But yeah, look, it's these guys in CIP by far our favourites within the sector, and with the REIT sector as a whole, but even within the industrials. Goodman's we were a little bit standoffish on because they're a little bit more development based as well. So, but they've showed really stable stable earnings and increases in rents and 99% occupancy rates. So. Through pretty difficult transitional period with rates going up, so yeah, we'd be sort of starting to nibble at this overall. Okay. Some clients
so start to buy it.
I'm fairly happy to buy it. There could be a rough ride on it.
Right.
We recently sort of trimmed. There was a rally in the REITs leading into the RBA where we trimmed back. So yeah, we'd be looking to buy back soon enough.
Okay,
so.
All right. David, what do you think of Goodman? Of course, mainly in that industrial warehouse property. I had to go in Sydney out to the western suburbs through Horsley Park a couple of weeks ago. It is mind-boggling how big these were, and you developed by Goodman, developed by Goodman.
Yeah, they should almost call it the Goodman's suburb, basically.
Goodman suburb. Yeah. It blew me away at the size of some of these facilities. Extraordinary.
Oh, exactly. And similarly up here in Brisbane, there's a massive big area out at Roachdale that they've developed. It's actually Woolworth's first mainly robotic distribution arm, where you effectively order it online and go and drive up and they put it in your boot. And that's the sort of market that Goodman really have created. Their customers are the likes of Amazon, DHL, obviously Woolworths and Coles locally, but they're providing that logistics supply chain network, not just for the traditional retailers, but also for e-commerce, and now actually starting to see demand in the data center area as well. So reading through the result, it was actually a very, very positive result from management. They've done everything right. As you said in the intro, their occupancy is 99%. For their new developments, which is a very, very big part of their business, their occupancy is 99.8%. So effectively, they sign up their customers before they start a building happening. So yeah, it's certainly a very, very well managed business. A little bit different to your traditional REITs in that it obviously holds some property, but it does a lot of development. So their net tangible asset backing is $8.87, so they're trading well above that, but that's because of the development business and their funds management business that they run. So it's effectively a very diversified business. Well managed, great business, and the outlook from the result today was actually very positive. Having said all that, though, we've got a lightened recommendation on it, and that's really based on the share price. Compared to the other REITs, it's done very well. They're trading nearly at $20 at the moment. So I think if you've had it in your portfolio and have run up well over the last few years, potentially looking at taking some profits.
Right.
There are other companies in that sector that probably look more attractive.
Like what?
Based on, well, CIP, the Centuria Industrial one that Mark spoke about.
Okay.
Also, Charter Hall Long Whale, CLW is the code for it. We like it, but it's more of a conservative long-term property holder, and it collects the rents whereas Goodman have the growth potential through development.
Does Centuria develop as well, or?
They do, yeah.
Oh, okay.
And
so that's sort of a like for like.
Well, sort of, yeah. I mean, the Centuria Industrial REIT holds the properties, and then Centuria, the actual headstock, that's separately listed, and that has the development pipeline in it there. So if you're looking for that development, you can do that separately. Whereas in Goodman, it's all in the one stock.
Okay,
yeah, a little bit lower risk with CIP obviously holding the properties.
Yeah.
So it's probably a little bit simpler, but as David pointed out, the growth, having the development in the same package, you're going to get some upside growth as well. So Goodman's generally will perform better to the upside, and vice versa.
Okay.